Hi, this is Joseph. This is an update for the best Forex Trade Copier. It is Thursday, June 14th, 2018, a few minutes before the New York stock market opens. And so I'll sort of set up the first part of the week, Monday, Tuesday, Wednesday. There was a few little trades here and there. Not really a whole lot of activity, but today we got obviously our breakouts. Yesterday with FOMC, it looked like we were going to get some possible breakouts, but I'll go ahead and start off here with the euro dollar. So we're going to look at the euro dollar, and I'm going to remove that there. And you can see this wedge pattern here that I was sort of referring back to at the beginning of the week, and then explaining how consolidation had been in place for quite some time since last week. I'll show you another chart where it's a lot easier to see. And then I had mentioned that earlier in the week that even if I get a break outside of this wedge pattern, it still doesn't necessarily mean price is going to trend. So when price broke to the downside on that wedge pattern, I received a couple of emails because some people had watched the video that I had mentioned this on about, and I was talking about this particular scenario, and then they said, well, why didn't you sell it? Like, we're sitting here waiting, why didn't you sell it? But I look at support and resistance as well as the wedge pattern itself. So very often you can see a break out of a triangle or a wedge. It doesn't always mean that, that's the move. That's the, the actual breakout and the trending move. It could still hold up. So again, going back here to that support low, this was my consolidation range. That high and that low. And to me, everything else was just moving inside of that range. And then I need to be careful, right? That's telling me, in my opinion, when looking at a 1 hour time frame, that tells me what I need to do for the most part. If there's going to be a technique that I'm going to execute, obviously I'm going to be trading some kind of a reversal in here. It's obviously not going to be a major trend. And if it is some kind of a trending move, it's just going to be short-lived. So I have to have my expectations set in line with what is going on here in price. We're stuck in a consolidation range. We were for quite a while, for several days. So again, when it finally broke out of that wedge pattern, I still have to wait for a candle to close below that support level to give me a particular strategy that I developed and I trade. It's called the continuation breakout trade. And it's very reliable. It's very consistent, profitable. I'll show you exactly how I traded that today. I traded it with some cross pairs. And I want to be careful because even though we are breaking out of this level after, the ECB rate decision and then the statement afterwards, so there's a few things that you need to be careful with. So, for example, you can see that spike right there, that candle, small body, a high and a low. That was FOMC yesterday. So even though we're waiting for specific economic announcements, it doesn't necessarily mean that every economic report or announcement is tradable. Sometimes you're going to get this kind of reaction. You're going to get some movement, but it's still, for my trading style, and what I have to do for my subscribers and my own trading account, I have to wait for my signal. I can't get in just because price is jumping around. If I'm going to get into a trade, I need a specific entry. I need a specific target so I can use a specific stop loss. Otherwise, I'm not going to take the trade at all. I can see, obviously scalping. When I first started trading, I used to scalp. But scalping's a very interesting game by itself because if you don't have a specific method for scalping with a specific entry and take profit levels, then you're changing the variables all the time. You're changing when you get in, you're changing when you take your profits. You're just basically, if you don't have a strategy for it, you're looking at the profitability in your trading platform, and that makes it very difficult to control the profitability in your trading system over time. You're trying to do that and duplicating that for year in, year out, year after year. That's a very hard way to go. You're going to have a certain percentage of losing trades and then a certain percentage of winning trades. And I'm not interested in having some winning trades and some losing trades. I'm interested in being right every single time. Now, I say this all the time because I get every once in a while somebody will say, you can't be right 100% of the time. Yes, I know that I cannot be right 100% of the time when it comes to trading. But wanting to be, or the desire to be correct on my trades 100% of the time, that is my personal goal. That is what drives me. That is what I can control. So what I need to do if I want to be right 100% of the time is I need to figure out, this is what I figured out since 2001 when I first started trading, I figured out when not to trade. That's one of my biggest advantages. I stay out of the market when it's just not providing clear opportunities. I can see very often where price is likely to go. But if I don't have my technique, my trade in front of me, where I can confirm it and it's qualified, then I'm not taking the trade. Even if I know where price is going, I'm still not going to take the trade. Because I know that if I do it in a situation like that where I don't have a confirmed trade and I can sort of see where it's going to go and I have a pretty good idea and then I get into the trade, that again puts me in that scenario or that gambling mentality where I'm kind of scalping, right? I don't have a specific entry. I don't have a specific take profit level. You never know where it's going to bounce and turn around. There are a lot of different things. So I wait for my trades to come to me, and you can see how long I had to wait. If I wanted to trade a continuation breakout trade, where I'm looking for a 1 hour candle to close outside of this range right here, you can see how many days I had to wait. I had to wait a long time just to trade a continuation breakout trade on this one. Now, this is not typical, but it's also sort of typical in the sense that the markets move in cycles. We get times and periods of consolidation, and then we get times and periods of breakout activity, and you have to wait for it. Based on your trading style and your techniques that you use, you have to wait for the optimum market conditions for you to execute that particular technique. Right? I have techniques that allow me to trade inside a consolidation, and then I have techniques that allow me to trade breakouts. I say that even though I have techniques that allow me to trade inside a consolidation, the longer consolidation continues, the less I trade. And it is, number one, to preserve and protect my capital and my subscribers' capital, and then to have that capital available and ready when we get these breakout moves. If I was to get into some of these trades inside of here based on these candle patterns inside of consolidation, and let's say I'm holding on for days and days and days and days, eventually, one of those trades is going to be wrong. It's going to break out. I don't want to be on the wrong side of that. And the other issue is, again, if I'm trading for my own personal account, for the amount of money that I put on my trades, and for my subscribers, I want to make sure that I have capital available to execute these better, bigger, more reliable moves. When there's a breakout like this, very often it's due to economic data or political statements, things like that. It's the outcome. It's the catalyst that causes that. The market's reacting to it. We're trading it during the New York session. All of these factors are lining up. This is a much better risk to reward opportunity for me, especially taking into consideration the techniques that I use and the ones that I developed. They just give me better trading opportunities. I'm less likely to see a retracement after I get into a trade. I have much more time to confirm the reason why price is moving. I need to know why price is moving. Otherwise, I don't want to take the trade. I want to trade with the rest of the market. I want to get into the trade and I want it to carry my trade to profitability relatively quick. I don't want to have my capital tied up in trades where I'm holding onto them for 12, 13, 14 hours. I want to get in and get out as quick as possible. So I look for these better, more optimum opportunities where I can execute trades for myself and for my subscribers where we're going to earn our profits a lot faster. I can get in, get out of the markets. I'm trading with the rest of everybody else, the volume in the same direction as everybody else. I don't want to go against everybody, or otherwise I'm going to get stopped out, right? That would be a deep retracement. I don't want to do that. I want to trade with the rest of the flow. This gives me a much better opportunity. The key is in being patient enough to wait for it. That is always the biggest challenge. I would rather have 10 winning trades for the week and have them all winning trades, good trades where they reach those targets and I'm not concerned about them. I'm not stressed out about the trade, rather than have 35 trades where half of them are winning, half of them are losing. In the beginning of my trading career, I wanted to be more active. I wanted to have more trades. It was fun, right? It was new for me. And then my mentality switched after I lost a whole lot of money. So you probably know exactly what I'm talking about. My mentality switched to, hey, why not have 10 winning trades and have them all great trades and no stress? I know I'm always going to make money. I know I'm always going to have a winning month. That's my biggest advantage, is that I know when to stay out of the markets when they don't make a whole lot of sense to me. Again, I very often can see where price is likely to go. I can see it. But if I don't have that right signal according to my system, then I will not take the trade. That is an extreme high level of discipline. I was not able to do that in the beginning of my trading career. It took thousands, hundreds of thousands of dollars of losses, literally real trading losses, to instill that discipline so that I could speak like this. I mean, what I'm getting at is that it's a lot easier to say it than to do it, but it's also a lot easier to do it after you've done it for a long time and you've experienced all this pain and you know what's going on. I've been trading since 2001, so you can see that with that amount of time, you could probably lose quite a bit of money. Obviously, I made money during that time. Otherwise, I would not have been able to stay in this business. But this is basically what I'm doing with my trade copier service. All of my subscribers get basically the same results I'm getting, unless for some reason they decide to turn off the trade copier for that particular day, or they're going on vacation, or whatever they're doing, whatever reason they have. They're going to get the same results I do. So this was the continuation breakout trade here on the euro dollar. So I'm going to go to the dollar index. Dollar index, again, really choppy. Same basic range of consolidation, just in the opposite direction. FOMC yesterday. And with the news. So in case you're wondering, if you've already heard this before, I'm sorry. If you haven't heard it, it's important for any subscriber considering my service. You probably want to know, how do you trade the news? What do you do? Do you jump in the minute you hear the news? I can personally, because I can control the numbers and the figures that I see and the execution on my platform. I won't do it if I can't control those factors. But here's the reality. All of my subscribers are using different brokers. And the fact that they're using different brokers means they're going to experience different things. And I can't control that. I can't see it. So my job as a signal provider to trade for you is to make sure that I'm also protecting your capital. And I want to make sure that you get the same fill that I do. So if I was to jump into a trade, the split-second economic data was released, let's say non-farm payrolls, while I could probably safely do it, it doesn't necessarily mean that you're going to get the same fill. Pip spreads widen to crazy numbers. Different brokers are going to do different things. So that's why I wait for these candles to close outside of these particular ranges. And I wait for, I say this very often, it's a phrase I've always used, wait for a closed completed candle based on whatever strategy I'm using. So that gives me enough time to not only double check and analyze the economic data and read through it to make sure I'm going to be trading in the rest of in the direction that the rest of the market is, but I can also check volume levels. I can check futures. I can look for all these clues, and then of course again simply waiting for that candle to close, regardless of which time frame I'm using, whether it's a 30-minute chart for an HL30 or a continuation breakout trade here on the 1-hour time frame. So I do trade the news, but I wait for my setup, which means I wait until the pip spreads and the volume levels return to a more normal level, and it's going to allow for a safer execution of that trade, so you're going to get the same fill that I get with my trade copier service. I don't jump in the split second because everybody would get different results, and I don't want to do that to anybody. You've probably seen signal services where they do that, and they say, oh, well, we had a winning trade, and then everybody else had a failed trade. Well, sometimes that could happen with the news, and I'm certainly not going to do that to my subscribers. So I'm trading for them as I would for my investors and as I would for my own personal account. I know on their end they're counting on me, and I need to protect the trades in the capital. So let's go to a few trades that we had this morning. Euro yen, we took this trade here. This one provided a continuation breakout trade. So you'll notice a few things that are a little bit different here on the euro yen. So this was my consolidation range for most of the week here on the euro yen. I just had to wait for a breakout. Now, as much as I wanted to sell it prior to the ECB rate decision this morning, I have to wait for ECB rate decision, because if I sell it at this level, let's say that green candle right there, I'll go ahead and open it up. I saw this. I wanted to sell it here. I could see the pressure to the downside building. I knew ECB was going to, was ahead of me if I got into the trade. If I was to sell it here, let's say on one of these candles, let's say at approximately 129.99, the issue is not that I would be wrong. I knew where it was likely to go. My concern is, if I get into a trade before the news, what type of news is it that I'm getting in ahead of? And is the reaction, traders' reactions, is it likely that it could create a spike in the opposite direction and then drop down, which is exactly what we saw today? And that's what I want to avoid right there. While I can get in at a good level, I also want to use a very affordable stop loss. I don't want to leave an open-ended stop loss. A lot of people do that. They get into a trade, and then they see something like this happen, and then they're hoping and praying that it's not going to go any higher, and they don't put a stop loss on the trade. And then if it comes down, they think, okay, wow, I made a great trade. Well, Maybe, but you're not preserving capital. And if you continue that kind of behavior, it's going to catch up to you. And you're going to blow up an account, or you're going to have some severe losses if you do that. So you want to make sure that every trade you get into, as I said earlier, I need a specific entry, a specific target, and then I have to use a very specific stop loss to preserve capital and protect capital on all of my trades, or I'm not going to take the trade. So if there's the chance that this pair or price could spike as a result of knowing what kind of economic announcement I was going to jump into or get into the trade in front of, like let's say ECB rate decision, right? Not only can ECB rate decision, but also the statement afterwards. I mean, even back when Trichet was in office, how many times did we see this behavior? We saw one thing at 7:45 Eastern, and then we saw something else and a lot of volatility at 8:30 Eastern time. You got to be careful. You have to pick your times. And even, again, as I said earlier, even though I know where price is likely to go, I still have to protect myself. I'm desperate, just like everybody else, to make money. I want to make money, but I'm going to do it safely. I'm going to do it aggressively, but I'm going to do it cautiously. It doesn't mean that I'm going to do it recklessly. So I'm going to trade aggressively when I get the opportunities to, but I'm going to do it cautiously. I'm not reckless, even though I'm trading aggressively. So I've got to follow these rules. If there's a chance that I'm going to see a spike in the opposite direction, which is exactly what I was trying to avoid today, and that's exactly what happened, then I wait and I wait. So then my next opportunity is to wait for price to come down here and close below that support, printing that continuation signal candle, and then I get in. And then I take it to my expected targets. Now this one is sort of finding a little temporary technical support low here, and I'm going to show you a couple of things that are going on here. You'll notice here with the euro yen, now we go back over here to the euro dollar, and the euro dollar took a little while longer to print that continuation breakout trade. It did not happen as soon as the euro yen did. And then you'll notice down here, it's sitting at last week's support low or close to it. Now, we all know that price does not have to hit that support low on the number for it to pull away and bounce back up. So again, taking profits and locking profits in on the euro yen is a very good idea when you're looking for clues. And this is something else that I do during the trading days. I look for areas where price is likely to stall and then start moving sideways. And when it's likely to move sideways, that could continue for the rest of the session. And what I don't want to do is get into a trade at, let's say, 7 o'clock New York time, and then still babysitting the trade at 8 p.m. New York time. That's an exhausting trade. Again, that ties up capital, and I would rather get in, take some of the profits, and get out knowing where some of these levels are, where price could potentially find a support and then stall and move sideways, and then use that information to realize that these other currency pairs might do the same thing. It might not be as obvious here on this chart as it was on the euro dollar chart, but I can find it. I can find it using Japanese yen futures. I can find it using dollar futures. We can go over here to the 4-hour charts. There's a lot of things that we can do here. We still don't even have a clean break until this candle here. We've got to wait for all of these things. And then here's that resistance point right back up there on the 4-hour chart for the dollar index. This is MetaTrader. This isn't futures the way you see on some of my other videos examples, so I apologize for that. When I'm using futures, I'm looking at true volume levels. I'm looking at a lot of these different clues to give me a better idea of how to trade these moves here in the FX. So again, taking some profits here and realizing normally I would expect a bigger move out of this trade. But again, we're running right into key support levels on some of the majors. And then we also have this support low from Friday on the euro yen 1-hour time frame. If it does drop, that's about as far as I would consider trading it. And I want to lock in profits before it hits that support low anyway. So if it gives me a second opportunity to get back into the trade, I certainly will. But right now I can see that price would probably stall. And this is a lot of activity. There's a lot to digest, right? A lot of people have either made some money or lost quite a bit of money as a result of getting in and going long on the news and then having the whole thing reverse and turn around and come down. I wait. I just wait for these trades to set up. I know that people are going to behave this way. I know that people want to jump in. How do I know that? I was one of them. In the beginning of my trading career, I did this. I would have got stuck going long right here in the beginning of my trading career. Back in 2001, I tried trading the news, and I also followed a lot of really poor signal services and chat rooms where they were calling out trades. These people were not qualified to call out trades. They didn't have enough experience, and I consistently got stuck in head fakes. So when I went off on my own and I canceled all of my subscriptions back in 2001 to all these chat rooms, I had to figure out how to protect my capital. I had to figure out how to trade this type of trading environment. And that's exactly what the continuation breakout trade does. It allows me to trade this type of consolidated market environment. The consolidation there is for a reason. Generally, it's the anticipation of economic data or political events. And it's just a matter of waiting for that catalyst. It's a matter of waiting for that event. And then I get my clean trade opportunity where I don't have anything to really worry about. You can see after it printed that continuation signal candle, there really wasn't much of a retracement. Sometimes it does go back up and retest the level that it broke out of. And sometimes if there's enough sufficient economic data and volume, especially taking into consideration the time that it took place, which was as we were leading into the New York stock market open and the New York trading session, there's going to be a lot more participation. There's going to be a lot more volume. So I'm going to get a better opportunity and I don't have to worry about the retracements, meaning that when I get into the trade, I'm not really looking at my trade going negative too far before it goes back into profitability and then reaches some of my expected take profit levels. Again, no losing trades. I close every month with a win. I don't have negative losing months. And again, my biggest advantage is that I know when not to trade. I can patiently wait. It doesn't matter how long I have to wait. I wait for the trade to come to me. I'm stalking these trades. It's like hunting. I'm waiting for it to come into my crosshairs, and then I execute. And then I've got to be aware of what's going on in the larger picture and somewhere else, like looking back over here at what's going on with dollar futures, Japanese yen futures. Where is price likely to stall? A lot of factors here that I take into consideration when I'm locking in profits here. So we'll do another update tomorrow, Friday.